All right, let's get right into it. Sometimes you see a company post numbers that are so good, you just have to ask, was that just a lucky break? Or was this all part of a master plan? Well, today we're digging into the solar giant Waaree Energies. And what we found is a story of just incredible growth that looks a whole lot like a masterclass in just getting things done. So let's start with the big, flashy number. In their latest quarterly report, Waaree announced a year-over-year revenue growth of, wait for it, 118.81%. That's not just growth, that's more than doubling your entire business in a single year. Wow. And if you thought that was impressive, hold on. Their EBITDA, which is a really good measure of their core profitability, grew by over 167%. I mean, these aren't just good numbers. They're the kind of numbers that make everyone in the industry sit up and take notice. Which, of course, brings us to the big question, right? How on earth did they do it? Well, the answer isn't just about what happened last quarter. It's actually about what they set in motion 2 years ago. But first things first, let's really soak in these results from their third quarter of fiscal year 26. We need to understand the what before we can really appreciate the how. So let's break down these numbers because they really tell the story. You can just see the massive scale of this jump. Revenue, like we said, more than doubled. But check out the EBITDA. It grew even faster. And you know what that tells you? It means they're not just getting bigger, they're getting smarter and more efficient as they go. And then you have PAT, the profit after tax, the actual money left at the end of the day. That shot up too. This isn't just one good metric, it's growth across the entire board. And just so we're all on the same page, when we talk about EBITDA, we're really looking at how profitable the main business is before you factor in all the accounting and financing stuff. It's a really clean way to see if the core operation is making money. And in Waaree's case, oh yeah, it's making money.
Now, profits like that don't just appear out of thin air. They come from actually making stuff. And the scale here is just mind-boggling. We're talking 3.5 gigawatts of modules in 1 quarter. To give you an idea of that pace, they were pumping out 52 modules every single minute. That is some serious manufacturing muscle.
So where did all that manufacturing power come from? To get that, we've got to jump in the time machine and head back to 2024. See, this incredible success wasn't an accident. It all started with a very specific plan, their initial public offering, or IPO. Now, for anyone who's not familiar, an IPO is basically when a private company decides to go public. It's this huge event where they sell a piece of the company to the public for the first time to raise a ton of cash to fuel their big growth plans. And for Waaree, this all went down in a super tight window back in October of 2024. They got their big anchor investors on board, opened it up to the rest of us, and closed the deal, all within about a week. Pretty quick. And here, right here, is the most critical piece of the puzzle. When they did their IPO, they were crystal clear with investors about what they were going to do. They said, we want to raise 3,600 cores, and we're going to use it for one main thing, to build a brand new, massive 6-gigawatt factory. That was the promise they made. Okay, so now it's time to connect the dots. We're going to see exactly how that 2024 plan, that blueprint, got turned into the 2026 powerhouse we're seeing today. This is where strategy meets action. And this slide, this is where it all comes together. It's the follow-through. Remember the plan from their IPO? Build a 6-gigawatt facility. So what was the result just a little over a year later? Bam! They've already got over 5 gigawatts of new capacity up and running across 2 brand new sites in Gujarat. I mean, this is the definition of putting your money where your mouth is. They didn't just talk the talk, they went out and built it. The best companies don't just follow their plans. They think ahead about what could go wrong. For any solar company, a huge risk is getting the raw materials you need, like polysilicon. So what did Waaree do? They went and invested $30 million in a polysilicon producer. It's a brilliant strategic move to protect their supply chain and make sure their giant new factories can keep running. So we've seen the how, but let's take a step back and talk about the why. This is about so much more than just making solar panels. It's about a much bigger vision to be a major force in the huge global shift to clean energy. And you can hear it straight from the CEO. The mission is to become an integrated clean energy solutions provider. Now, that phrase is really important. It means they're not content just being a manufacturer anymore. So what does integrated provider actually look like?
Well, it means you start with what you're great at, in their case, solar manufacturing, and then you start adding all the other pieces of the clean energy puzzle. We're talking battery storage, inverters, transformers, even developing the big power projects themselves. And they're even looking ahead to the next big thing, like green hydrogen. They want to be your one-stop shop for the entire energy transition.
All right, let's wrap this up. The story so far has been incredibly positive, right? But for any good analysis, you have to look forward and ask, what's next? And that includes both the good and the, well, not so good. On the opportunity side, things look amazing. Their current order book is sitting at around 60,000 crore rupees. That is a massive number that gives them a really clear picture of their revenue for years to come. It shows you the demand for what they're selling is just off the charts. But does that mean it's all clear skies and smooth sailing from here on out? Well, as with any company growing this fast, there are always things to keep an eye on. And to be fair, let's look at the risks they themselves pointed out back in their IPO documents. They're pretty straightforward. They noted that since this was their first time on the public market, there's no telling what the stock price will do over time. And of course, they include that standard but super important warning. Investing in any stock has risks, and you could lose money. It's just a healthy dose of reality that comes with any investment story, no matter how good it sounds. So that's where we stand. We have a company that laid out a really clear roadmap during its IPO, and then just went out and did it, with incredible speed and fantastic results. They've built the factories, they've shored up their supply chain, and now they're expanding their vision to cover the whole energy space. The question really isn't if they can execute anymore. The real question is, what's the next big thing for this solar powerhouse?